Welcome to Forex Central. We're thrilled to have you join our YouTube, Facebook and Telegram channel dedicated to all things Forex. Here, you'll find a community of passionate traders, investors, and enthusiasts who share a common goal of achieving financial success through the exciting world of foreign exchange. Stay tuned for regular updates, trading tips, market insights, and educational content that will empower you to make informed decisions and navigate the Forex market with confidence. We believe in the power of knowledge and collaboration, so feel free to engage with fellow members, ask questions, and share your experiences. At Forex Central, we're committed to creating a supportive and inclusive environment where everyone can learn, grow, and thrive. Our channel is designed to be a hub of valuable information, resources, and opportunities that can help you unlock your trading potential. Thank you for being a part of Forex Central. Get ready to explore, connect, and embark on an exciting journey towards financial freedom. Happy trading! Forex Central Weekly Gold Analysis for June 12 to 16, 2023, our pre-payable trade entry scenario is a buy entry at 1960, buy stop loss at 1953, buy take profit 1 at 1973, buy take profit 2 at 1975, buy take profit 3 at 1983. For June 12 to 16, 2023, our alternative trade entry scenario is a sell entry at 1952, sell stop loss at 1957, sell take profit 1 at 1940, sell take profit 2 at 1933. Here is our Forex Central technical analysis for gold chart at 4-hour time frame. For support and resistance analysis, our support 1 at 1957 to 1953, our support 2 at 1939 to 1933. Support 2 is also our demand zone and take profit 1 for sell position. Our support 3 at 1920 to 1914. Support 3 is also our maximum take profit for sell position. Our resistance 1 at 1975 to 1983. Resistance 1 is also a supply zone and take profit 1 for buy position. Our resistance 2 at 2001 to 2005. Resistance 2 is also our maximum take profit for buy position. Here is our Forex Central 4-hour chart. Gold trend analysis. For long term, gold is in a downtrend. For short term, gold is in range mode. Here is our Forex Central June 12 preparable entry position for gold at 4 hours time frame chart. As long as our support 1 at 1957 to 1953 will hold the price and not break, it's preparable to buy. Our buy entry is at 1960 to 1957 zone. Hold buy until price will reach to take profit 1 and 2 at 1973 to 1975. Secure 50% of your position at profit 1 area. It is compulsory. The other 50% will hold until take profit 3 will be reached at 1983. This buy entry position has a risk-reward ratio of 4.22. It has a potential profit of more or less 2055.6 pips. It's important to remember that the Forex market is highly unpredictable and subject to various external factors. Therefore, conducting thorough research, consulting professional analysts, and using a combination of fundamental and technical analysis can help in making informed trading decisions. Please note that this analysis is for informational purposes only and should not be considered as financial advice. Always conduct your own research and consult with a qualified financial professional before making any investment decisions. On June 12, 2023, there is a lack of major news releases. When there is a lack of major news releases in the Forex market, it often results in a period of lower volatility and reduced market activity. Here are a few potential outcomes when there are no significant news events. Number 1. Reduced volatility. Without major news releases, currency pairs may experience lower levels of volatility, resulting in narrower price movements and fewer trading opportunities. Traders may find it challenging to identify strong market trends or significant price shifts. Number 2. Consolidation. The absence of major news can lead to consolidation, where prices tend to move within a range-bound pattern. During these periods, traders may witness limited price breakouts and may opt to trade within the established range or employ range-based strategies. Number 3. Technical analysis dominance. In the absence of fundamental news, technical analysis gains prominence. Traders often rely on chart patterns, trend lines, support and resistance levels, and other technical indicators to make trading decisions. Technical analysis may guide traders in identifying potential entry and exit points. Number 4. Focus on minor news. Traders may shift their attention to minor news releases, economic data from smaller economies, or geopolitical events that could impact specific currency pairs. Although these events may not have a broad market impact, they can still create short-term fluctuations and provide trading opportunities. Number 5. Preparing for future news. Traders may utilize this period to prepare for upcoming major news releases. They can conduct research, review historical data, and anticipate the potential impact of future news events on the forex market. This preparation can help traders be ready to act when significant news releases occur. It's important to note that even in the absence of major news releases, unexpected events or developments can still impact the forex market. Therefore, traders should remain vigilant and adaptable to any unforeseen circumstances that may arise. On June 13, 2023, Tuesday, is the release of the U.S. Consumer Price Index, CPI, data. The release of the U.S. Consumer Price Index, CPI, data can have an impact on the gold market. The CPI measures the average change over time and the prices paid by urban consumers for a basket of goods and services. Here are a few potential impacts of United States dollars CPI news releases on the gold market. Number 1. Inflation expectations. The CPI data provides insights into inflationary trends in the U.S. economy. Higher than expected CPI figures suggest rising inflation, which can erode the purchasing power of the U.S. dollar. In response, investors may turn to gold as a hedge against inflation, leading to an increase in gold prices. Number 2. U.S. dollar strength. The CPI data can influence market expectations regarding the Federal Reserve's monetary policy. If CPI figures indicate higher inflation, there may be speculation of tighter monetary policy, potentially strengthening the U.S. dollar. A stronger dollar can exert downward pressure on gold prices, as it becomes relatively more expensive for investors holding other currencies. Number 3. Safe haven demand. In certain cases, unexpected CPI data releases can trigger market uncertainty and volatility. If the CPI figures surprise significantly to the upside or downside, it can spark concerns about the stability of the economy and financial markets. In such situations, gold, being a traditional safe haven asset, may attract increased demand as investors seek to protect their wealth. Number 4. Market sentiment. CPI releases can impact overall market sentiment, influencing investor behavior and risk appetite. Positive CPI figures indicating higher inflation can generate positive sentiment, potentially driving investors towards riskier assets and away from safe haven assets like gold. Conversely, weaker than expected CPI figures can dampen market sentiment, increasing the appeal of gold as a safe haven asset. It's important to note that the impact of United States dollars CPI news releases on the gold market can vary depending on the specific context, market conditions, and other concurrent economic factors. Traders and investors should consider analyzing the overall market environment, in addition to the CPI data, to make well-informed trading decisions in the gold market. On June 14, 2023 will be the release of the U.S. Core Producer Price Index (PPI) data. The release of the U.S. Core Producer Price Index (PPI) data can have some influence on the gold market. The core PPI measures the average change over time in the selling prices received by domestic producers for their output, excluding food and energy prices. Here are a few potential impacts of U.S. core PPI news releases on the gold market. Number 1. Inflationary pressure. The core PPI data provides insights into the price pressures faced by producers in the U.S. economy. Higher than expected core PPI figures suggest increasing inflationary pressures, which can have a broader impact on consumer prices. If investors perceive the data as indicating potential future inflation, it can contribute to a rise in gold prices as investors seek to hedge against inflation. Number 2. U.S. dollar movement. The core PPI figures can influence the perception of the strength or weakness of the U.S. dollar. If the core PPI data indicates higher inflationary pressures, it may lead to expectations of tighter monetary policy from the Federal Reserve, potentially strengthening the U.S. dollar. A stronger dollar may put downward pressure on gold prices, as it becomes relatively more expensive for investors holding other currencies. Number 3. Safe haven demand. Unanticipated core PPI data releases that significantly deviate from expectations expectations can create market uncertainty and volatility. Unexpected inflationary pressures or deflationary signals can impact investor sentiment and trigger demand for safe haven assets like gold. During periods of market uncertainty, investors may turn to gold as a store of value and a hedge against potential economic risks. Number 4. Market sentiment and risk appetite. Core PPI news releases can influence overall market sentiment and investor risk appetite. Higher than expected core PPI figures may suggest robust economic growth, potentially increasing risk appetite among investors. In such cases, gold as a safe haven asset may experience diminished demand, leading to a potential decline in prices. Conversely, weaker than expected core PPI figures can dampen market sentiment, raising the appeal of gold as a safe haven asset. It's important to note that the impact of U.S. core PPI news releases on the gold market can be influenced by various factors, including overall market conditions, other economic indicators, and geopolitical events. Traders and investors should consider analyzing a comprehensive range of factors to make well-informed trading decisions in the gold market. On June 15, 2023 Thursday, there will be numerous news releases. When there are numerous major news releases in the market, it can lead to increased volatility, heightened trading activity, and potential price fluctuations. Here are some potential outcomes when there is an influx of major news releases. Number 1. Increased volatility. Major news releases can cause significant price movements and increased volatility across various financial markets, including Forex. The release of key economic indicators, central bank decisions, or geopolitical events can trigger rapid changes in market sentiment, resulting in sharp price swings. Number 2. Heightened trading activity. Traders actively monitor and react to major news releases, leading to increased trading volumes and liquidity in the market. This surge in trading activity can create ample opportunities for traders to enter and exit positions, but it also intensifies competition and the speed at which prices may change. Number 3. Reassessment of market expectations. Major news releases often provide new information that can impact market expectations. If the release data differs significantly from the consensus or previous expectations, traders may reassess their views on the economy, monetary policy, or market trends. This reassessment can lead to rapid adjustments in asset prices. Number 4. Impact on currency markets. In the Forex market, major news releases can have a pronounced effect on currency pairs. Economic indicators such as GDP, employment figures, inflation data, and central bank announcements can influence exchange rates. Positive news may strengthen a currency, while negative news can weaken it. Traders may adjust their positions based on the interpretation and implications of the news releases. Number 5. Trading opportunities and risks. Major news releases create both opportunities and risks for traders. Volatile market conditions can present trading opportunities for those who can effectively anticipate and react to market movements. However, sudden price swings and unpredictable reactions to news can also lead to increased risk and potential losses if trades are not carefully managed. It's essential for traders to stay updated on the economic calendar, monitor news releases, and have a solid risk management strategy in place when navigating periods with multiple major news releases. Additionally, traders may choose to focus on specific news events that align with their trading strategies, or seek guidance from professional analysts to navigate the increased market activity effectively. On June 16, 2023, Friday, is the release of the U.S. Preliminary University of Michigan (UM) Consumer Sentiment Index. The release of the U.S. Preliminary University of Michigan (UM) Consumer Sentiment Index can have an impact on financial markets, including the Forex market. The UM Consumer Sentiment Index measures the level of confidence and optimism that consumers have in the U.S. economy. Here are some potential impacts of the U.S. Preliminary UM Consumer Sentiment release. Number 1. Market sentiment. Consumer sentiment is closely linked to consumer spending patterns, which play a crucial role in driving economic growth. A higher-than-expected UM consumer sentiment reading indicates increased consumer confidence, suggesting a positive outlook for the economy. This can potentially boost market sentiment and lead to increased demand for riskier assets, such as stocks, while safe haven assets like gold may experience decreased demand. Number 2. Currency strength. A positive consumer sentiment reading can strengthen the US dollar. Increased consumer confidence suggests a healthy economy and can lead to expectations of higher consumer spending and economic growth. Forex traders may interpret this as a sign of potential future interest rate hikes by the Federal Reserve, which can attract investors seeking higher yields. and strengthen the currency. Number 3. Consumer spending. Higher consumer sentiment often translates into increased consumer spending, as confident consumers are more likely to make purchases. This can positively impact sectors such as retail, consumer discretionary, and services. Forex traders may monitor yuan consumer sentiment to gauge the potential impact on specific currency pairs influenced by these sectors. Number 4. Market volatility. The release of yuan consumer sentiment can result in increased market volatility. Forex traders should be prepared for potential price fluctuations, particularly if the released figures significantly deviate from market expectations. Sudden shifts in sentiment can impact currency pairs, as market participants reassess their positions based on the updated consumer sentiment outlook. Number 5. Impact on central bank policy. Consumer sentiment plays a role in shaping the economic outlook and can influence central bank decisions. Higher consumer sentiment may impact the Federal Reserve's perception of the economy and potentially influence monetary policy decisions, such as interest rate adjustments. Forex traders often monitor yuan consumer sentiment as part of their assessment of potential shifts in central bank policies. It's important to note that the impact of U.S. preliminary yuan consumer sentiment on the forex market may vary depending on the overall market environment, other economic indicators, and geopolitical events. Traders should consider analyzing a range of factors and use additional tools and indicators to make well-informed trading decisions. Thank you for considering subscribing to my YouTube channel. By subscribing, you'll gain access to exclusive content, informative videos, and exciting updates. Join our growing community of like-minded individuals who share a passion for topic subject. Don't miss out on the latest videos that will entertain, educate, and inspire you. Hit that subscribe button, click the notification bell, and be part of the journey. Remember to give a thumbs up to the videos you enjoy, leave your comments, and share them with others who might find value in them. Your support means the world to us, and we look forward to having you as a valued subscriber. Together, let's explore, learn, and have an amazing time on this YouTube adventure.